if Trump wins, which it looks like he's increasingly going to do, and if he wins by the margins that it looks like it's going to do, you're going to see a lot of these things exacerbate. Gold's going to go up more, probably. Bitcoin will probably go up. The short-term economic upside for the economy will probably get reflected in higher equity prices, but it'll also push out long-term rates. The inflation picture becomes a little bit murkier.
It's probably net positive for the crypto price. Now, maybe it pushes private use of money away from Bitcoin if that were the case. Because if the government can manipulate it, they could dump it onto the market, they can buy more, and before you know it, they're using it like they are interest rates and controlling regular money, and we don't want that.
Chamath Palihapitiya, the founder and CEO of Social Capital, presents an optimistic perspective on Bitcoin's future, predicting it could reach $500,000 or even higher. In a recent episode of the All In podcast, he discusses how upcoming halving cycles and increasing global adoption are pivotal factors driving this potential surge. Palihapitiya notes that while the price jumps following past halvings have shown diminishing returns, Bitcoin's inherent scarcity continues to capture the interest of investors. He argues that if historical trends hold, Bitcoin could realistically approach $500,000 in the near term, with an even more bullish outlook suggesting it might exceed $1 million within 18 months. A crucial aspect of Palihapitiya's analysis is sovereign nations' anticipated adoption of Bitcoin. He references insights from Wences Caceres, former CEO of Xapo, highlighting that some countries may begin to treat Bitcoin as a reserve asset, working alongside their domestic currencies. This dual currency framework could buffer against inflation and economic uncertainty, allowing governments to counteract local currency depreciation with Bitcoin's deflationary attributes. As global economies grapple with rising inflation and currency devaluation, Palihapitiya posits that Bitcoin's appeal as a stable, hard asset will only grow, enhancing its role in the financial ecosystem. Furthermore, Palihapitiya contends that Bitcoin could ultimately replace gold as the primary store of value. He emphasizes that the cryptocurrency's limited supply and increasing utility in transactions make it a strong contender for this role, particularly as concerns about the stability of the US dollar amount. Institutional investors are beginning to recognize Bitcoin not merely as a speculative asset, but as a long-term hedge against inflation and a strategic investment. This evolving perspective among major investors further cements Bitcoin's status in the modern financial landscape, positioning it as a vital player in the future of money. As the world navigates complex economic challenges, Bitcoin's growing acceptance could redefine traditional concepts of value and currency. If you want to stay updated and understand what the top Bitcoin and cryptocurrency investors and leading thought leaders of our time are thinking, don't forget to hit that subscribe button and turn on post notifications for more videos like this.
There's another couple of nuances here that I think are important. The US dollar complex is thriving, which means like the US dollar is strong. Back-end yields are rising. And then another thing that I look at is this thing called put call skew. So basically, like on balance, how are people hedging in the short term? And in the bond market, they own a lot more puts than they do calls. I think that this is the entire financial infrastructure of the world repositioning itself from what was a toss-up election to a Trump win. And when you look at why, it's because when you forget the candidates themselves for a second, but if you think about the actual policies and where the spending will occur, I think that there has been a very clear decision that the Trump economic plan will drive better growth than the Harris plan. And if you think that there is more growth coming, typically what will come with that is a little bit more inflation. The risk premium that you're going to need in a high growth environment is higher. What is risk premium? That is, how much do I want to invest for a risky asset versus a safe asset? And so all of these things are coalescing. So I think that the short-term takeaway that I have just looking at all of this data is that in the economic distribution of outcomes, this is now tilted overwhelmingly to a Trump win. And this is not an emotional statement or what I want to happen, but this is just an observation of how tens of trillions of dollars of self-interested financial actors have now repositioned their risk. And if Trump wins, which it looks like he's increasingly going to do, and if he wins by the margins that it looks like it's going to do, you're going to see a lot of these things exacerbate. Gold's going to go up more, probably. Bitcoin will probably go up. The short-term economic upside for the economy will probably get reflected in higher equity prices, but it'll also push out long-term rates. The inflation picture becomes a little bit murkier, but I think that that's what's happening. I think that the financial markets are pricing in a Trump win. I think in the short term, what happens is that you see more economic growth, but in the medium term, inflation goes up, and so you want to hedge.
Right.
So it's more about a durational balance of assets. So in the short term, you'll be long the things that will generate earnings, but in the medium to long term, you want to hedge yourself. So Bitcoin and gold, I think, will trade that way.
Nations' potential adoption of Bitcoin as a reserve asset raises significant questions about the relationship between cryptocurrency and government monetary policies. While the idea of countries accumulating Bitcoin may seem attractive, it poses a paradox. Bitcoin was designed to reduce government control over currency. If governments become major buyers, they could exert considerable influence over this decentralized asset, creating tension between Bitcoin's foundational principles and the risk of manipulation. This could ultimately deter private users if governments leverage Bitcoin for a monetary policy as they do with traditional fiat currencies. Conversely, proponents argue that a government-backed Bitcoin reserve could benefit both the cryptocurrency ecosystem and national economies. For example, if the United States were to amass significant Bitcoin reserves, it could enhance financial stability and safeguard during economic downturns, helping mitigate inflation and currency devaluation. However, concerns about government oversight remain, as mismanagement could lead to market volatility through strategic buying and selling. Raoul Pal has suggested that the fourth quarter of a presidential election year, which he refers to as the banana zone, could see a notable surge in Bitcoin prices, as increased government stimulus during such periods may drive inflation and, in turn, elevate digital asset values.
So I actually think it's a bit of a red herring because the US dollar is the world's reserve currency. The US doesn't need to hold other assets in reserve. Yes, it's got gold, but that was a legacy from leaving the gold standard. Other countries have to have reserves to support their own currencies, so they don't need it. Now, would they do it? I think it sounds flashy. For what reason, I don't really know. But let's assume that they do. Let's say I'm wrong and they do build something. It's kind of a weird world because, yes, obviously it's good for the crypto market because there's yet another buyer. But it's also weird because Bitcoin was set up to try and replace the government's control over money. And now you're inserting the government as one of the largest buyers of private money. I don't really like that, actually. But, but it's probably net positive for the crypto price. Now, maybe it pushes private use of money away from Bitcoin if that were the case. Because if the government can manipulate it, they could dump it onto the market, they can buy more, and before you know it, they're using it like they are interest rates and controlling regular money, and we don't want that. So firstly, it depends when these events happen. If the economy is rolling over after you've had a strong period, inflation has been rising, the Fed are raising rates, if it happens then, it can risk turning into something bigger. When you're the opposite, which is the business cycle is just turning up now, the Fed are cutting rates, the probability of this being a bigger event is significantly lower. So from that probability, less so. The other thing is something happened in 2008 that has stopped a lot of this. In 2008, the central banks discovered the money printer. And the money printer, and you and I have talked about it on this show before, essentially is debasing the currency by printing more currency. Now, it's dressed up in a nice term called liquidity these days. It used to be quantitative easing, but they find different ways of doing it. When they print more currency, it makes the value of that, the purchasing power of that currency go down versus scarce assets. So it makes assets go up. So now every time, every 4 years, in fact, that we've come close to something that could be nastier, they've started printing money. And it's not just the US, it's everybody, all the main central banks. And that has kept a bottom under markets. Even in 2022 was a bit trickier because we had inflation. So it was hard to print money. But eventually when it got to it, when the S&P was down about 30%, they kind of went enough's enough. And they started printing money again. So I don't think there is a lot to fear. In fact, I would be so outrageous to claim the probability of a down 50% market is now miles smaller than it was when you and I grew up, when it was a common occurrence that we would see it. We won't see this again because of the money printer.
Okay.
Doesn't mean it's a risk-free world, obviously, because when they print money, they're debasing your savings by 8% a year to start with. But if you think of that 8% cost of that debasement, that's like the central bank's buying a put option on the whole system, and it's costing you 8% premium a year. Put it that way, it's not the worst thing in the world, but it's never great.
Institutional adoption, the halving, regulatory changes, and macroeconomic trends will influence Bitcoin's performance in 2025. After a turbulent 2023, marked by the CFTC's enforcement action against Binance, market confidence was restored following a favorable settlement for the exchange. Additionally, the recent 50 basis point interest rate cut by the U.S. Federal Reserve may boost Bitcoin as lower rates make it a more attractive investment. With inflation stabilizing and the approval of 11 spot Bitcoin ETFs resulting in significant capital inflows, nearly $22 billion for BlackRock's ETF alone, there's potential for upward price movement throughout the year. Given these developments, how do you view the current state of the crypto market? Share your thoughts in the comments below. Also, ensure you like this video, subscribe to the channel, and if you want to know more about how government policies are impacting Bitcoin and other cryptocurrencies, then you have to watch this video next.